We're back on the podcast. Ernest Wong, head of research from Baskin, joining me today, and we've got a lot to talk about. The Berkshire Hathaway meeting. Also going to talk a little bit about Apple. It's Q1 earnings season, so let's get into it. How's it going? Did you listen to or watch the Berkshire meeting? How did you watch it?
Watched about half of it.
Okay.
The second half I read a transcript afterwards.
Interesting. It was on a Saturday. You have young kids. You normally take your kids to sporting or some kind of, so it's hard to. I watched part of the Berkshire Hathaway meeting at home, and then my younger son had a basketball tournament in Detroit. We live in Toronto, so while we were driving to Detroit, we listened to not the podcast, but we listened to the meeting by streaming. My 17-year-old son, Lee, fell asleep in the car, obviously. We left around 11 o'clock. He was out the night before. But he was listening. He was paying attention. He was like, why are all these people asking this old guy life advice questions? Which was, I said, I guess because he's one of the richest guys in the world and has some pretty good one-liners. But
does he know who Warren Buffett is?
He does know who Warren Buffett is. My son is interested in investing, so watch out one day, clients. You may have another Schwartz managing your portfolio. So my son was interested enough in it, but then he asked if we could turn it off so he could start listening to some of his hip-hop music. So your takeaways, Ernest, on the Berkshire Hathaway Annual Meeting. This is the first one Warren Buffett has done ever without Charlie Munger. Is that true? Or
yes.
Yeah. I think there was one point where he leaned over to speak to Greg Abel, who eventually is going to be running Berkshire Hathaway, and said, anything to add, Charlie, or whatever. And so everybody kind of had a tear in their eye about that one. But your takeaways, what you thought about Berkshire Hathaway Annual Meeting?
Well, I think he looked old. Mm-hmm. I don't know if that's what you noticed. He is old.
Yeah.
I think that
he's older than us. I mean, age is relative. Yeah.
I think there was clearly an element of being aware of his mortality. Mm-hmm. And maybe it's because Charlie is no longer here.
Yeah.
But I felt like this was the first meeting where you could clearly tell Buffett was prepared for the next step, both for himself and for Berkshire.
He mentioned that he's been slowing down. He's no longer taking phone calls from the CEOs of the companies that he owns. He's just really doing a lot more reading. The phone doesn't ring as much. He doesn't have the energy. I think he was also walking with a cane. There was pictures of him with a cane. So it's evident. But at age 93, to run one of the 6 or 7 largest companies in the world, it's still an amazing feat. And even though physically and the way he sounded, he's getting up there, his mental capacities are still amazing.
Right. I think there were several questions where he kind of noted just at the end that whatever happens is going to be Greg's problem.
Yeah.
Like he said that in the very first question, when he was talking about what was going to happen to the Apple position, he said, that's something that Greg's going to have to think about.
That's right.
He said that again for, I think, the question on whether Berkshire would invest in international markets. He said that's something that Greg will have to decide in the future. And so I think that was a different tone from before, because before Buffett would kind of say his plan isn't to go anywhere. He's still leading Berkshire, and that he's the one kind of calling the shots.
Yeah.
But you could clearly tell, and he even directly said it in the question about to your point about CEOs calling Greg Abel about advice, that he's clearly taking a step back.
So for those who don't know, Greg Abel is the heir apparent. He's eventually going to be CEO of Berkshire Hathaway, making all decisions on investing, capital allocation. He's going to be the boss. Greg has been at Berkshire for a very long time, running their energy division.
Utilities,
yes. Yeah. And proud Canadian boy, born in Alberta, knows Canada very, very well. There was some interesting questions and discussion about Canada, by the way. We can get into that. But Greg Abel in his 60s, and he really took center stage this year.
Yes. Mm-hmm. I think he provided a big endorsement for Greg Abel in the overall meeting. I think there was a question where somebody asked, how does Ted and Todd, the managers of his stock portfolio, how do they fit into the capital allocation decisions of Berkshire after you're gone?
Yeah.
And he said, no, he said very clearly, Greg Abel will be the one. Well, first of all, he's going to be dead, so it's not his choice.
Yeah.
But Greg Abel should be the one making the capital allocation decisions. And he made another comment in another place where he said, Greg and Buffett think very similarly in terms of how capital should be allocated, which, that's, I can't imagine being endorsed, but imagine being endorsed by Buffett to say you think the same way as he does.
Yeah.
Right.
Yeah. Well, I obviously he's been mentored very, very well. For those who don't know what Ernest is talking about, Todd and Ted are two portfolio managers at Berkshire Hathaway. They have been given a large chunk of money to run. Ted Weschler, Todd Combs. I think they run about $10 billion of the investments, a pittance compared to the overall stock portfolio of Berkshire Hathaway, which is over $300 billion. Buffett still calls the shots on all major investments, but Todd and Ted have, I think, a small allocation to make their investments. But clearly, they are not going to be running the investment portfolio. Maybe they'll be providing investment decisions, but will be Greg Abel at some point making all the shots. Well, I guess we'll see what happens.
There was an interesting comment that Greg, historically, Berkshire owns hundreds of companies. And Buffett and Charlie, before he died, they operate in a very decentralized manner. They were not dictating the decisions and tracking the performance of every single business specifically. And he said, so sometimes there would be managers that are kind of just coasting because they made their money. And he made a comment that with Greg in place, he's been a little bit tougher on these guys.
Yeah.
So you might see a little bit of better performance actually out of some of the smaller businesses that are in Berkshire.
Yeah. Buffett always said he's a teddy bear. Unless you really lie to me or commit fraud, then I'm ruthless.
Yes.
But I don't think Buffett is necessarily the toughest manager in the world. And I think Buffett did a great job explaining how Berkshire is set up and all these companies and why the conglomerate should remain as it is, especially because if one division is doing really well, the cash flow from that division can go to another company tax-free. The conglomerate makes a lot of sense, even though there's lots of people talking about after Buffett passes, maybe Berkshire will get broken up. Maybe Berkshire will start a dividend. Maybe the next manager will be more aggressive, putting all that cash to work. So what I want to talk to you about today, the topics on Berkshire is the Apple trade, the cash position at Berkshire, people talking about dividends and what we think is going to happen going forward, and also reviewing the results for Berkshire Hathaway for the first quarter. So let's talk about Berkshire's Apple position. At the end of December 2023, Apple was about $175 billion position at Berkshire Hathaway, representing maybe 25% of the overall market cap, almost 50% of the portfolio. That's unbelievable. We got some emails from clients saying, I heard Warren Buffett trimmed some Apple in his portfolio. What should we do? And my response was, I didn't. Is just thinking, well, none of our clients have 50% of their portfolio in Apple. So what he decides to do with Berkshire Hathaway and his Apple position doesn't necessarily apply to a client who owns 3 or 5 or 6% position in Apple. Now, Berkshire gave the explanation that they were trimming Apple possibly to get in front of taxes going up in the U.S., kind of like Canada, where the capital gains tax rate is going up. Maybe Warren Buffett thinks the capital gains tax rate in the U.S. is going up. He's got a gigantic capital gain on Apple. It's grown to a massive position. I think they've made 6 times their money on the stock. It's gigantic. He has to trim it at some point. And I think Buffett, the stock had run up to the end of the year, so it probably made a lot of sense waiting for the new tax year to take profits. Your take on Warren Buffett and his explanation for trimming Apple?
It was the very first question that he was asked at the AGM.
Because it was announced that morning, right, that Apple had been trimmed. The results came out. No one knew until Saturday at 8 a.m. that Berkshire had trimmed 10 or 13% of its Apple stake.
His answer was not super convincing.
Yeah.
I think we'll probably never fully know why he trimmed it. His answer, to your point about taxes, was a little strange.
Yeah.
Because an increase in the corporate tax rate would impact every company, not just Apple.
And doesn't Buffett always say that the best defense against portfolio returns is to not take profits, to not pay taxes early, to do nothing if you own good businesses? And here he is trimming an Apple stake and because he's worried about taxes going up. That seems kind of out of character, in my opinion.
But then I think the most important thing, if you are worried about Buffett's Apple position, is that he said it's very likely that Apple will continue to be his largest position going forward.
Yeah.
And it will be after he dies. So I don't really know what else there is to say about it.
No.
He did say that Apple is an even better business than Coca-Cola and American Express. So
those are two stocks positions that he's never sold shares in, American Express and Coca-Cola, I think. He's never trimmed those stocks. He's trimmed some other stocks, and I think he's regretted it. Trimming Moody's, selling Costco. Buffett isn't perfect, but that Apple trade is pretty close to perfect. Buying a nice size position in Apple and then having it run up in 6 times and growing. I just think from a risk management standpoint, it was prudent to trim the shares of Apple. It had gotten to an ungodly sized position. And so at some point, it just has to be trimmed. And I think investors should expect more Apple trimming at Berkshire, especially if he thinks he can do better by just getting over 5% in cash or waiting for that fat pitch. I think Buffett is, everybody wants him to be more active. He's sitting on a gigantic, I'm not going to swear, but a gigantic amount of cash, approaching $200 billion now. That's insane. And, but he says, well, I'm getting 5+% on my cash and T-bills. I'm making my shareholders 10%, $10 billion a year of cash. Market's done well. Maybe I'm worried about a pullback or a market coming down. And cash gives us optionality. I'm protecting your investment here. Anyways, it's funny. Everybody flocks to the Berkshire Hathaway meeting, but sometimes Buffett gives some very cryptic answers. Sometimes he's very direct. The Apple response, I think, was cryptic. It's hard to read exactly why he did what he did.
And I think that's exactly right about how everybody wants to learn from Buffett.
Yeah.
And everybody is eager to trying to figure out how he became so successful.
Yeah.
But how many investors have 50% of their portfolio in Apple?
No one.
So it just goes to show.
Yeah. So the cash position, there's been a lot of talk about, okay, Buffett, you're just building up this cash. You've been very conservative lately. Now, keep in mind, Buffett runs an insurance company. Bad things can happen all the time in insurance. Floods, hurricanes, weather, pandemics. You just don't know. You can wake up and all of a sudden you have to pay out a lot on claims. And that insurance business has been growing in size every year. So even though Buffett has $180 billion of cash, it's not all liquid to be spent. It grows commensurately with the size of the insurance business. Am I right about that?
Yes.
Yeah.
And as a side note, I thought there were quite a few shots taken at the insurance industry during the entire the whole AGM.
Yeah,
they made a comment that all the insurance companies they just kind of want to follow whatever's hot at the moment. So the hot thing today is cyber risk, which they are being very cautious on because they don't know the scope of the losses that could be there.
It's incalculable. The losses that could happen if, let's say Amazon's cloud was shut down.
Yes.
Or what do they call it? Ransomware. I mean, it's just impossible to know how much they'd have to come up with. So I don't blame them. As also the changing dynamics of insurance when it comes to cars, right? All cars are getting, better protection. And we have Tesla with this almost automated driving. How is this going to play out in insurance? It's not easy to know the future with insurance risks.
They actually talked about that. There was a comment about how, sure, things like self-driving cars are reducing accident rates, but the opposite side of that is that the cost to repair cars has gone through the roof. So in the end, sure, there might be less accidents, which is good for society, but that doesn't mean that anybody's actually saving money.
There might be fewer accidents, but people are also taking more risky behavior with these because they think their cars are safer. And so they're checking their phones or looking at their infotainment unit or whatever they're doing. And that can lead to more accidents. So, humans always have a way of, being less safe as things get safer, so to speak. Okay, so what about the call for the dividend at Berkshire Hathaway? Did Warren Buffett talk about what he would do with the cash? I think he mentioned that he would be perfectly happy to have more cash than he has today. And even if his rates fell, he wouldn't be pressured into putting that cash to work.
Right. I think the key was that although Berkshire is a lot bigger now and 200 billion is, like an unfathomable amount of cash.
It's insane. Yeah.
They'd rather maintain the liquidity, both for the reasons that you just described in the insurance business, but also because they want the dry powder available for extremely large deals that could happen when they do. Yeah. So I think a good example of that is in 2009 when they bought the railway, BNSF, right? They want to be able to make these opportunities when they come up, and you don't know when they're going to come up. That's the key. And so instead of buying something where you're not really sure about the return profile or even giving it back to shareholders, then the whole point of investing in Berkshire is that you trust the investment team, that they know what they're doing. Team being like 3 people, but is that you trust that they know what they're doing with their investing. And so why would they pay a dividend back to you? It doesn't make sense.
And I think one of the things Berkshire, I think probably Warren Buffett's looking at is the market has done really well recently. He's a value guy. He's very conscious on paying low multiples for earnings of stocks. If you look at his portfolio, he likes to pay, 10 to 15 times earnings. Sometimes that gets him into trouble by buying crappy companies, but sometimes it works out very, very well. And so he is not going to be pressured. He always says that, people are yelling at him, standing watching the pitches go by, swing you bum. And I love the fact that he's so stubborn and he sticks to what he knows. And even if, you thought he should have been more aggressive in 2021 in the pandemic, putting money to work instead of selling, or, whatever it is, Buffett is there to protect you as a shareholder. That's his number one thought process is, I don't want my company to be wiped out by stupid mistakes, and all about protection. Canada. So this is the first time I think Warren really mentioned Canada. I think he said they have a lot of great assets. He really likes doing business in Canada, given that Greg Abel is from Canada, that they know it very well. They made some investments. And so there's some speculation because Buffett said, well, we're looking at something right now in Canada. Any thoughts on that, or just pure waste of time speculation?
Right. So the question, I think, was there were a couple questions about Buffett, why don't you invest in India? Why don't you invest in China more?
Yes.
What about Canada? And I think Buffett's general answer is that he prefers to invest in the US, apart from a few things that he's done outside, like BYD. Like he's invested in a couple of Japanese trading houses. But he prefers to invest in the US because he's an American, and that's what he understands. He doesn't understand like the consumer spending habits of the Czech Republic. He knows how Americans like to spend. And he noted that Canada was very similar to the US in terms of the culture, the way people like to act, the rules and regulations, the system that we have here. And he specifically noted that he has no problems investing in Canada from a political perspective at all.
That's good.
He feels very comfortable with the regulatory regime. And that, to your point, he was considering investing in something in Canada. I think there's been a lot of speculation about what this could be. I can probably say it's not Shopify.
No. It's probably not Constellation Software either. No, we don't want that. Buffett likes tangible assets. So you and I were speculating that maybe something like a Parkland Fuel, which has a refinery and logistic and commercial fuel assets, which Buffett already bought Pilot in the U.S., which is a similar-ish type business. Maybe he'd be looking at some of the pipeline or midstream assets as the Canadian. I mean, he's got to think that the Canadian infrastructure landscape, just like we've been talking about a number of times on the podcast, looks a lot better now that the TMX pipeline expansion is complete, now that LNG plants are at least being built or thinking about being built, that there could be good opportunities to invest here. And with the U.S. dollar where it is, come on, man, take a swing at some pitches here. Like, the Canadian dollar is the lowest it's been in a long time.
I would say it's probably something that is being marketed for sale out there.
Yeah.
Buffett he's not just going to go out. The way he phrased it, it wasn't that he was looking at TD Bank's stock and said, "Oh, this looks cheap to me. Maybe I'll buy some stock." It was a deal that was brought to him that he wanted to evaluate whether it made sense for Berkshire.
Absolutely.
So that's why I think it could very well be Parkland, because there's activists involved and some shareholders who were trying to sell the business. It would especially, I don't know if our listeners follow Parkland too closely, but I'm sure the Simpson family would love to own Berkshire shares instead of Parkland shares.
Yes, for sure.
That's as a side note.
That's a side note, yeah. But of course, I don't know if they can roll over shares of Parkland, which is a Canadian-based company, into a U.S. company of Berkshire.
Who knows?
And I don't think Buffett's giving out stock anymore, right? He wants to pay cash.
No.
Anywho, that's a wrap on the Berkshire AGM meeting. We hope that Warren Buffett will be on the dais for many more to come. It'll be interesting and sad. I mean, sad once it passes, but interesting to see how Greg Abel handles himself, what the company looks like going forward. If there's not going to be any changes, but the results. Let's get into that. The first quarter results for Berkshire. The insurance business had an incredible quarter. I think that, Ernest, there were like next to no catastrophes in the first quarter in North America, where Berkshire primarily writes big reinsurance contracts. I think their insurance business in property and casualty, also the car business, was a little bit better this quarter. So that really drove the results. The rest of the business, meh.
Yeah, I would say not really too much to note. I think Buffett has made an emphasis over the years that you shouldn't pay too much attention to quarter-over-quarter volatility, especially since earnings are directly impacted by the swing of the marketable securities
for sure in
the portfolio.
And Buffett doesn't give guidance, but I think he said that don't expect the insurance business to be as good as it was for the rest of the year. Don't extrapolate Q1 results. But he also said that if things continue the way they are, the railroad business, some of the manufacturing should have a little bit better results going forward for the rest of the year. So we're still proud shareholders of Berkshire Hathaway here and see lots of value, and still like the way the culture and the management is run. And with the dry powder, hopefully some exciting things can happen going forward.
And one last point on Berkshire. I think a lot of people are naturally wondering what's going to happen to Berkshire's stock price when Buffett eventually passes. And I don't think the shares today, I don't think it's trading, it's reflecting too much capital allocation premium for Warren Buffett. Like the multiple relative to his book value is still fairly stable, has been over the past few years. And so it's not like Constellation Software, for example, where the market clearly expects them to make more deals, and that's baked into the company's valuation. I think Berkshire, if you look at the sum of the parts and the cash that they have and all those kinds of things, I think it's trading at a very undemanding multiple. Yeah.
I think Berkshire, if he's waiting for a recession or a pullback, could surprise and actually put cash to work. I like what he said. Just, it's so simple but easy in the sense of, Our job is to grow operating earnings and reduce shares outstanding. He's been reducing shares outstanding quite substantially. I think they're down 12% shares outstanding over the last 3-4 years. And operating earnings are moving and trending in the right direction. So that's why Berkshire stock is near an all-time high and should, all things being equal, should continue to go higher as operating earnings and share count goes down. Operating earnings go up, share count goes down. Anything else to add on Buffett or Berkshire?
Not really.
So why don't we just skip right to Apple then?
Sure.
So we talked about Buffett trimming some of his Apple, still in a gigantic position. He didn't dump it all. Still has $150 billion in Apple. Ernest, there was a lot of angst, a lot of nervousness heading into Apple's quarterly earnings, which were released last week. A lot of worries about a slowdown in China. We talked about that on the podcast before. A lot of worries about lack of innovation, worries about some antitrust, of course. I forgot about that. That's still a gigantic So there's some overhangs on the stock. The results that Apple released were Apple always beats earnings usually. So they were better, and the guidance was better than it's feared, and the drop of China sales was better than it's feared. There was so your take on Apple currently and our excitement on why we think things are going to improve in the next 6 to 12 months.
Well, as the name of the podcast suggests, I think we want to focus on the long term.
Yeah.
We don't want to talk about, is China going to be 2 or 5% higher or lower next quarter? Certainly in China, things are not great. I think sales were down 8% in China.
Yeah.
As Tim Cook said on the call, although he has to be really careful with his words in China about China now, because he got fined before.
They got fined. Anyways, it's too much in the weeds. Yeah.
He said that China remains the most competitive market out there, and the ecosystem overall in China is probably less developed than in the rest of the world.
Okay.
So China is a struggle. But then on the other hand, I think if you look at Apple's position overall in the devices space, I think they have no competition. Like in the iPhones, I think I did a tweet about this.
Yeah.
90% of teens want iPhones. And the reason that this matters is because once you're in the Apple ecosystem, you're not going to switch to Android. That's what you're going to be using going forward.
There'll be a few outliers, but and I retweeted what you tweeted, and I spoke to my 17-year-old son who's in high school, and I said, do any of your friends use Android or any other type of phone? And he looked at me like, are you crazy? I don't know anyone my age that has an Android phone. All my friends, everyone I know in my school uses iPhones. Everybody has AirPods. That's pretty big. The young generation coming up loves Apple products.
Yeah, and I think that you can kind of see this in the new iPad event that they had yesterday. They announced like 2 or 3 new iPads. They were nothing super transformative in terms of the changes that they made, but they have no competition in this market.
Yeah.
Like everybody who's in the market for a tablet is going to buy this thing.
One of the things, Ernest, that you and I talked about was a lot of the results of Apple were pulled forward as a result of the pandemic, right? We're all at home. We bought new iPads. We bought new computers. We bought AirPods to do our conference calls. We bought new phones. People put money to work in buying things. And Apple's earnings doubled, right? They grew tremendously over that short period of time. And I think, a lot of people are saying, well, Apple, they're not growing revenues and it's no longer a growth company. They're not thinking long term. They're looking, the most recent quarters, but not recognizing how many sales Apple pulled forward. Now it's digesting that. And eventually, all these iPhones, iPads, AirPods, watches, you name them, they're going to have to be replaced at some point, and probably sooner rather than later. So that's why I'm talking a little bit short term here. But I think that going forward, Apple, the refresh cycle, the upgrades as a result of Apple adding better chips, better devices, AI, hopefully we'll find out what's going to happen with Apple's AI plans very shortly, that could lead to improvement in revenues going forward.
And I think there's good reason to think that the reason why Apple has been so successful in the past, the reason why 90% of teens want Apple iPhones, right, is because of the way that they integrate the products together. Apple makes the phone, they make the software, they provide a lot of the apps. It's a very good experience overall. And I think this matters when you're going into AI, however, whatever that ends up being, because Apple devices are going to end up providing the best experience, best performance for AI. And so there's good reason to think that not only is Apple's position maybe even strengthened as they get into AI, but that it drives the refresh cycle in the near term.
One could imagine that Apple will have new AI type software that will make the iPhones, your iPhone and my iPhone, more compatible, better sharing of information, whatever it is, leisure, entertainment, communications. And if you're a kid and all your friends are on that device, it just, like you said, it strengthens the moat, strengthens that network effect. It's hard to see that being displaced in North America right now. China, though, is another story. Talk about why China is so competitive. Why are things working so well in North America and some other countries for Apple, but Apple being a little bit hampered most recently in China?
Well, first of all, China has a lot of, how should I call this? Local manufacturers of Android phones that are generally lower priced. They sell them at a cheap price to the market. I think brands like Xiaomi, no one owns a Xiaomi phone.
I don't even know what
in Canada.
Yeah, no one owns that in Canada. Does Huawei also make phones, or that's more?
Huawei is in China as well.
Yeah.
But so it's a very competitive phone market overall.
Yeah.
There's a lot of restrictions in terms of how Apple runs the App Store. So the network effect and the ecosystem overall for Apple is a little bit weaker than what it would be in the rest of the world. And then lastly is that there's a lot of super apps in China. So things like WeChat, where you're just not as locked into the overall Apple ecosystem.
You're more locked into the software.
Exactly.
And do people in China care about the messaging software on Apple?
No, because they're using WeChat.
They're using WeChat. So it's just different culture, different software. That said, there was a data point that came out today that said that China sales rebounded as Apple cut prices. So I think a lot of it has to do with just pricing. Apple is a higher end luxury type product. There's a status symbol to it. Maybe people thought, well, these other brands in China are good enough. I don't need to have an Apple. There was also some political stuff going on. At one point, you never know exactly what was going on, but the Chinese government said that China employees of a certain part of the government aren't allowed to use Apple iPhones. That ain't good. That's not a good look.
Yeah, I don't think you want to hand wave away any risks because it is a risk. Like it's plausible that it's possible, not plausible. It's possible that the Chinese government will say, okay, Apple, you can't sell phones ever again.
I know you could wake up one day and that could happen.
Yeah, but I think sometimes you can overthink these kind of things and kind of miss the big picture, which is that, like if any business loses 15% of their sales, then of course it's not great.
Yeah.
But I think that what's the probability of that actually happening?
Don't know. In the meantime, Tim Cook is doubling down on China. He went to visit China. He had meetings with high-ranking officials. They opened another Apple store. They're not abandoning China. They'll have to work out a strategy that makes sense, whether it's lower pricing, maybe a lower tier phone. Don't know what's going to happen there. In the meantime, he talked excitedly about the opportunities in other foreign markets, India, Latin America, Europe, still lots of growth there. And, we are all focusing on one data point, which is China, but there is growth in other parts of the world and lots of potential to take market share going forward.
I think one thing that is a little underappreciated about Apple broadly is how much of their earnings today comes from services. I think there's still a perception out there that Apple is a device maker. Like they sell hardware that people can switch whenever they feel like it. And that generally trades at a lower valuation because it's a non-discretionary item. It's fairly mature. There's only so many phones that people are going to buy every year. But services today contribute, I think, about 40% of their overall profits. And that's still growing double digits.
Yeah, and services include Apple Music, their streaming business,
App Store,
as well as Apple Care, warranties,
yes,
paying for storage. Those are growing. They're raising prices on a lot of those products. Apple will probably come out with more services as well going forward. We'll see what happens with AI. We'll see. But the bottom line is Apple has been stumbled a little bit. I think a lot of it is due to the pull forward from the pandemic. And we think that growth is going to start to pick up again, even though it's such a gigantic company. Talk about the buyback, by the way, because that was an interesting announcement.
So they announced a $110 billion buyback, which is, according to some news sources, it's the largest buyback authorization in history.
Insane. So Apple's planning to buy back in the next 12 months about $110 billion worth of its shares.
Yes.
Give or take.
Yes.
What does that represent of its market cap?
So I think their market cap today is about
2.8, 2.7 billion.
2.7.
Yeah, so 3.5 to 4%.
Which is roughly what a normal company would announce.
Yeah.
So it's not like they're repurchasing 20% of their stock.
No.
It's just a normal thing that they're doing, reflective of how much cash that they're generating and how big Apple is.
Now, keep in mind, Apple is still sitting in a net positive cash position and probably generates between $90 to $110 billion of excess cash flow. So this buyback may not whittle down the cash. And they haven't been aggressive in buying companies of note, right, with M&A.
No.
So the cash balance is steadily growing. Apple could have easily announced a $200 billion buyback, could have easily said, we're going to take on a little bit of debt because our stock is cheap.
Right.
And that wouldn't have made much difference to the balance sheet, but still very conservatively run business.
And I would add that it's not like Apple repurchasing $100 billion of stock is restricting them from doing anything at all, just because of how much money they're making every year. I think there's a common criticism of buybacks is that companies are buying back stock instead of investing in their business.
Yeah.
But that's not the case for Apple at all.
No.
Capital is not the issue for Apple.
So all the big techs, excluding Apple, have announced gigantic spending on the cloud for AI, whether it's investing in data centers, buying new chips, people, God knows what they're spending it on. But I think it added up, if you include Meta and Amazon and Google, what have you, it was like the plan is $200 billion of capital expenditures. Whereas Apple's like, yeah, we're really not growing our capital expenditures too much. Talk about the difference why Apple is really the capital light story versus these other big techs. And is it a mistake or it's just not necessary for Apple in the way it runs its business?
Well, first of all, they don't have a public cloud business like Amazon or Microsoft or Google. So they don't need to invest in this.
Yeah.
I think they do have a little bit of first-party servers that they use for things like Apple Cloud, but it's not material in the grand scheme of things. There was a question an analyst asked about whether Apple was going to start developing their own in-house. I think they were going to spend more on servers because of AI. And they said, we'll probably follow the same approach that we historically did, which is we'll build some ourselves and we'll use third-party capacity, which is why I think you saw in the news that I think they're partnering with Google for AI.
Yeah.
And so I think it's because of Apple's position, the fact that everybody has an iPhone already in their pocket, that they don't have to go out and spend this money.
Exactly.
They can just leverage other people's spending.
And that's such an underrated point about Apple is it has such a commanding position. Everybody wants access to this device, right? Every maker wants your eyeballs to be looking at it, whether it's Twitter or Meta or Amazon. How else do you access the cloud, the internet? Through the iPhone. And That's why we think Apple is the king. Apple is the king, and everybody else bows down to it. Anything else you want to add on Apple's earnings or future guidance? Or
well, I think there were some questions about the Vision Pro because this was the first quarter that it launched. There's been news articles that people were returning it.
Yeah,
people didn't like it.
Give them headaches. It's a weird, clunky device. You look ridiculous in it. Is it going to take off, or is it, because we've heard rumors, we've heard discussion that that a lot of people are using it for healthcare, whether it's in surgery, good for training when, you're working in the office, I'm at home, and you want to show me something. It could have lots of great uses for enterprise, for business, for services.
I think that's exactly what Apple is saying, is that a lot of the returns that you're seeing at the Apple Store are more consumers, hobbyists who thought, oh, maybe this is a cool device, I'll buy it and I'll see what happens. But the real use cases so far today are enterprise. Enterprise is buying it for things like training. I think they gave an example for people using it for, like, surgeons using it for surgery.
Yeah.
So I think Apple is still trying to figure out where the Vision Pro fits in, what the best use cases for this product are, and we'll see what happens.
So, and for people that don't know what we're talking about, the Vision Pro is that ski goggle looking device that goes over your face that will eventually change leisure, gaming, and entertainment and services, but it's going to take some time. But we think it's probably the future as they iterate the device and probably get it smaller and less stupid looking. So anything you're reading, anything you want to share with our audience, any books? Are you still reading the Live Nation Ticketmaster book?
Yes.
Yeah.
I think so there was news recently that the Department of Justice is planning to sue Live Nation for being an illegal monopoly.
Yeah.
Obviously, the suit hasn't been filed yet, so we don't know exactly what it is. Stock fell a little bit.
Yeah.
But I think what you need to realize if you read this book, Ticketmasters, is that the Department of Justice has been after Ticketmaster for a long time.
Yeah.
This is not anything new. They've had to defend themselves against antitrust in the 80s.
Hasn't there been a Department of Justice monitor with the company the entire time? Like, haven't they been watching it?
Yes, and that's what the company said on the earnings call. It's that yes, they've seen the same reports that everybody else has.
Yeah,
but it's first of all, the questions that they're receiving from the Department of Justice are mostly focused on specific practices that take place within their business. They're not focused on, is Live Nation and Ticketmaster together stifling competition?
Yeah.
So it's not focused on the overall premise of the merger in 2010. I think, secondly, a breakup is extraordinarily unlikely for a variety of reasons. I don't know if we'll get into that now, but I think, and the stock market reacted slightly positively on that commentary.
So the Ticketmaster book called Ticketmasters is about how Ticketmaster merged with Live Nation at the time it went through antitrust.
No, so I'm not done the book yet.
Yeah, okay.
I think
spoil it.
I think the book ends with the merger of Live Nation and Ticketmaster.
Yeah,
there was a bit of controversy about that at the time as well. But it goes all the way back to the origins of Ticketmaster, from the days and various ticketing solutions that have been invented over the years.
It's always been a confusing business, not transparent about how much you're paying, what you're paying, why you're paying. And when people face that, they want to blame someone. Like, why am I paying a $6 convenience fee or a $4 printed home fee and all this garbage? And I don't blame people wanting to get answers about that, but I think Live Nation has been very clear as to why all these fees exist, and there's lots of bad actors and a lot of different businesses when it comes to paying fees for lots of different things, whether it's resorts or restaurants, what have you. It's not always clear.
Right. I think with regards, maybe we'll do another Live Nation podcast at some point, but the book is extremely detailed.
Okay.
It gets into like the weeds about in this year, Pearl Jam tried to go on this tour, and then they were arguing with the Ticketmaster rep at this specific venue. Like it's super, super detailed, and that's why it's been taking a while.
I remember just before we finish, because I know we're getting way long in the tooth here. I remember reading about Pearl Jam recently, and at the time people were upset at how much tickets were, and it was like $20 to go see a Pearl Jam concert. I know inflation, but yeah, we would kill today to pay $20 to go see our favorite bands. So that's all the time we have for you today. We'll see you back here real soon, and thank you very much.